making sense of the current narrative of Indian banking. May I please invite our panelists, Mr. Amitabh Chaudhary, Axis Bank, Mr. Ashu Khullar, Citi Bank, Mr. Rajkiran, Union Bank of India, Mr. V. Vaidyanathan, IDFC First Bank, Mr. Ravneet Gill, Yes Bank, Mr. Rakesh Sharma, IDBI Bank, Mr. C.S. Ghosh, Bandhan Bank. And to moderate this session, may I please invite on stage Mr. Tamal Bandyopadhyay again.
Good evening and welcome back to an exciting session just after Mr. Vaidyanathan's talk on how important in corporate governance. This is the new narrative of making sense of the new narrative of Indian banking. Before that, an apology on behalf of the organizers. MC was not informed. These two gentlemen at the last moment, Mr. Amitabh Chaudhary of Axis Bank, he had to rush to London for some work. And Mr. Chandrasekhar Ghosh, again, both of the things came this evening. I think she was not informed. But anyway, we have a full house. There's no problem. We don't affect the discussion flow. As you have seen that all these gentlemen have been chosen for particular reason. They're very important and they are contributing to the new narrative of Indian banks. Right from the extreme right, Vaidyanathan, an NBFC took over a bank, management takeover. So it's another matter that when India Bulls tried to take over LVV or the other way, RBI said no, but this gentleman, RBI said yes. Technically, a bank got merged with NBFC got merged with bank, but he actually set a trend when the management controlled by the NBFC, an exception RBI made. So he is a part of the new narrative. Mr. Gill, my God, he doesn't look to be happy. So either he is like wine maturing, or if his wife could be saying that you are looking so old. Last 1 year, nobody would grudge you. I think you are the most challenging assignment in Indian banking. To some extent, very far-fetched, but what Vikram Pandit was doing for Citibank in US in 2008, similar thing for you. Rajkiran ji, you are the second instance of a merger among the public sector banks. You are two banks, you're not taking over, but they are being merged with you, Andhra Bank and Corporation, and you will become, in terms of assets, number 5 in the banking system. So you are in the news, part of the new narrative. Ashu, you are not there, you don't have the high NPAs, you don't have those kind of challenges, you've got a stable ship, but Indian market is unknown to you. You were, last 20 years, you were overseas and not even in Southeast Asia, mostly Europe and London, UK, etc. So it's a new ball game altogether. So we'll hear how you steer Citi to the next level in this thing. And finally, I have Sharma Saab. I think there's a competition between Ravneet and him, whose chair is more challenging. Okay, so because where he is been given something which is grappling with lots of issues and which Mr. Vaidyanathan spoke about, the corporate governance, disclosure, etc., which is, I'm sure every word he could relate to there. Sharmaji has a different kind of issues, and he is also heading a very unique entity. Nobody knows, actually, there's a lot of confusion. What is he? Is he a public sector bank or is he a private bank? For RBI regulations, he is a private bank, but for CVC, CVI, he is a public sector bank. He is not owned by government, but he is owned by LIC, who is a proxy government. So all of you are part of the new narrative, but some are challenging in the sense not exactly positive challenge. Some they are actually very critically they're looking at it, and some are challenge for the sense it's to grow bigger, better, newer things, and Rajkiran Sahab, you are one of them. It's not because you have a flight to catch, but I am giving you the first person to talk about this. This merger announcement was just half an hour, 1 hour before when India's first quarter GDP was pretty low. Everyone was expecting 5%, and everyone was saying that something is going to happen because we need to have a different headline, not the GDP, and then merger announcement came, certainly. So first is quietly in private. Were you in the know of it, or you also got surprised that by the merger?
Actually, like we knew that the merger is going to come. No exact dates and all that. Some discussions on the like viability of different combinations were being discussed. But then like exact entities which are going to be amalgamated and the dates and all that, these were because we are all listed entities naturally.
Right.
So naturally, these kind of things have to be disclosed at the right point of time. It was done.
Yeah.
Yeah. So, and then your other point. To like shift the headline to something else, I don't agree with that.
That's a separate
issue. Because actually, this thing actually, if you go back to 91 Narasimham Committee report, he said that India should have 5-6 large banks. From those days, it was all there. Actually, it was under discussion. Only it materialized now. But then this discussion was going on for long.
But sir, no, that was a media creation. Forget, don't take media seriously. But I'm just saying that did you know that Andhra Bank and Corporation Bank would be given to you?
No.
So given a choice, you would have looked for some other banks, or were these two banks?
It's a great combination, and we are like I think
On what basis?
all the three entities are definitely they will be like they have a very good relationship, and like I think we'll make a great bank.
Definitely, sir, definitely. And now we are trying to have a little conversation with each of us, because each of you have different issues. So I would not like to discuss the same thing and ask normal conversation is there. Rather, I'll have one person each and talk about this. So tell me, sir, why do you say it's a great combination? Because it's south and west. Is that the thing? What is it?
Actually, there are synergies in merger which will be looked at. So when we said we were looking at different combinations, so there are like basically the geographic spread.
Yeah.
That is the first synergy which comes in.
Right.
Then you look at their balance sheet sizes. Yeah. So and
you'll be 10 trillion plus. Assets, right?
Yeah.
Yeah.
So actually,
close to 10 trillion as of September.
It is overall total book is 15 lakh crores. Actually.
That's a typical Indian concept. You do deposits plus advances.
Plus, yes.
But I'm talking about assets.
It is 7 lakh crores.
Yeah. Assets will be close to 10 lakh crores. Three of you? No?
Yeah, all put together, yes.
Yeah.
On the advances side, it is about 7 lakh crores. Because typically in India, we take deposit plus advances and
that's the business.
Yeah, business numbers. So that is another synergy. And the kind of the staff strength we have. Basically, we are typically a North Indian bank, more on the western and northern side. There two are South Indian. So it will help us in managing our human resources better. And technology-wise also, like all the three of us are on Finacle platform. So that is another synergy which is going to come. And like the culture-wise also, see every bank over a period of time has its own culture. So like all the three banks, now since we are doing a lot of work on the mergers, there are teams working. So culturally also it is a very, very good fit. So as a combined entity, I think we will do much better. And 1 + 1 + 1 will be 3.5.
Will be 3.5. Sir, I'm asking you a very, very naive question. I'm not a technology expert. But I understand that this technology synergy is a little misconceived thing, because I can call it technology, we can call it technology synergy that all of us are Finacle. But there's a huge difference between Finacle 10, Finacle 8 and Finacle 7. I mean, it takes about 18 months to synergize this. That's what happening in the Union Bank merger. So is it the same thing? You're on the same Finacle platform or different platform?
For us, actually, Union Bank and Corporation Bank are at Finacle 10.
Okay.
Andhra is Finacle 7.
Yeah.
Actually,
so it will take 18 months to upgrade.
Not necessarily.
Right?
Actually, Union Bank has upgraded in 13 months from Finacle 7 to Finacle 10 last year. So it took us 13 months. So I think the first 2-3 months goes in understanding. So Andhra Bank should be anything between 10 to 12 months.
Again, I said, because you are all unique entities today, so we'll have one each we'll discuss. So tell us, 31st March is your deadline for the merger, right?
The date is not yet announced, but yes,
roughly.
It seems to be. Yeah.
So you have about 4.5 months here and all. So what are the steps like, if it's not confidential? Can you tell us how are you going about this merger?
Yeah, general things we can discuss.
Please,
because,
please tell us.
All three are listed entities at this point of time. We'll get.
No, we're not talking about the conversion of price and all, but other things.
Yeah, first thing.
Well, I want to know, sir, one thing. 3 entities can have only one corner room and one CEO.
Yeah.
So how do these guys are looking at you? I mean, so definitely, there will be a psychological issue. They would not like it. Rajkiran साहब साला कहाँ पे आ गया? अब दोनों हम लोग यहाँ पे बात करते हैं. So that I'm sure you are feeling that resistance. That are they listening to you and how the entire thing is panning out?
Yeah,
tell us.
in public sector, that way we have sufficiently good clarity. We can work with any CEO.
Okay.
So for us, CEOs are known only the previous day or on the same day.
Okay.
So for that way, public sector is absolutely comfortable.
That is because of you are the leader. That's why you are saying
No,
it.
no, it's absolutely.
Had you been in Andhra Bank CEO's shoes, would you have said the same thing?
But see, then these issues actually, yes. But in public sector setup, I think these are not the issues.
Okay,
And I think for us, CEO may not be the issue. But then, since you mentioned about the process, actually,
sir, please.
see, issue is public sector banks from the outside look similar.
Yeah.
But if you look at our systems, processes, and products, there is a lot of differences. Even within Pinnacle 10, actually, the kind of customization what I have done for my products and process is much different from what Corporation Bank has done.
Yeah.
So there are about 30 teams
Yeah.
which are created, drawn from all the three banks.
Yeah.
They are looking at every department, every product, every process, and we are creating the documents. So I think you are almost in the final stages.
Yeah.
Like my housing loan.
Yeah.
If you look at it, it's a simple product, but then housing loan, the way I do it, Corporation Bank may do it differently, Andhra Bank may do it differently. Now from 1st April, assuming that is the date, I need to have a common product. How to reach there? And we need to come to an understanding that all the three banks put together that we agree on, this is the way we will do housing loan, this will be the product, this will be the way we will do personal loan, this will be the process followed. On the technology front, on the digital side, like all of us have our mobile apps, which mobile app will be the best suited for 1st April. All decisions have to be taken. So once we decide on that, then the technology team comes in. And then they start developing the technology part so that 1st April when my customer comes into the branch, he will not have a problem. And my staff also have to be trained much in advance so that on that day when we open as a combined entity, we don't have no issues. All these things are being worked out to a plan. And actually we were lucky that the Bank of Baroda merger happened before us. So we had a lot of learnings from that merger.
That's a template before you?
There is.
So you must be having a lot of town hall meetings now. You have started?
We are doing. Actually, all these town hall meetings, all the three MDs we are addressing together.
Yeah.
We are meeting the customer, we are meeting the staff. Because generally in public sector, particularly the human resources, it is difficult to integrate.
Yes.
So now it is I think that may be your next question. Yeah. So human resources are a challenge. So now all the three banks actually, it is very important to give a comfort. Because there is actually, as a public sector, no, because employees actually are having a very distinct culture.
Yes.
They have their space. Now, Andhra Bank person may be feeling when I get amalgamated, what will be my position, what will be my
Yes,
power,
sir.
and all that. So those are the things we are trying to address. So during these town hall meetings, actually from the social media interactions and all that, I could feel that there is a lot of comfort being given. Particularly younger generation is getting much comfortable because as a larger entity, they are going to have much bigger opportunities to grow. Compared to a smaller bank in a larger entity, they will have a much bigger opportunities to grow. So I'm very sure.
So video conferencing almost every day among you?
Not necessary actually. We meet, like every week we have some meetings and whenever required we meet. But it is at the GM's level where these committees are working. The EDs are supervising. We meet actually regularly. Like last week we were in Ahmedabad, all the three MDs.
Sir, two more questions, then we'll go to there and all. Yeah. You yourself spoke that HR is a challenge. Now, all of us, I didn't start my banking reporting that time. When New Bank of India and this merger took place, and we are told that it was like the victor and vanquished kind of thing and all.
Yes.
So you were a banker by the time when the New Bank
Yes.
of India merger came. That's the first in public sector banks. So I'm sure you will not having that approach, right? It's not Union Bank is the big dada leader, no, right? So it's all on an equal footing.
It is a different narrative this time, right? You could have seen the Bank of Baroda merger. It was an equal opportunity given, even in positioning people. Everywhere it is taken care so that the smaller banks don't feel that they are sidelined. There is no big brother attitude. We made it very clear. It is a totally different narrative in this amalgamation which is built. It started with the FM making announcements. From that point onwards, all our town hall meetings, all our communications, we are giving them equal opportunity.
Yeah, no, absolutely. That is why I said you are here and you are talking about the new narrative. So you will have, you need to have more general managers now. You will be creating chief general managers positions also. You'll have more EDs to accommodate all these people.
Right.
That's how it will be working on.
Yes. Actually, number of EDs vacancy has gone up. CGM position is created, and we are not removed any of the GM vacancies. So the opportunities for people will remain.
So last question is this. The perception is this: when everybody is talking about we need to have more credit growth because to fuel economic growth, banks are averse to give credit, etc., etc. Now this rest of the year and when it started more than a month back and all, is it business as usual for you? Like the credit growth, etc., will be the focus is there, or you are more busy about putting your house, the new house, in order, and credit can wait?
No. Actually, credit has not been affected. What we did is this department, the business department, we segregated. We didn't involve them in the merger process. As it is, my branches have nothing to do with the merger. They are working normally. It is only the departments which is concerned to the business, which is working from the corporate office. We have segregated them so that the business doesn't get affected.
So it will be regular credit, regular deposit acquisition, everything is regular.
Everything will be normal.
And there's an in-house team with working on the margin.
Definitely, yes.
So thank you, sir. We'll have a last round where all of you have a common question, but we'll go to Vaidyanathan. Again, you are a part of the new narrative. But before that, only one, not clarification, but my understanding is this: when you refer to committee spoke about 5 or 6 larger banks. Indeed, Narsimhan committee spoke about 5 or 6 larger banks, but not in this context. Narsimhan committee did not speak about do merger to rescue the weak banks. It's a different story altogether, sir.
It is not. Actually, this is not rescue.
Okay. Okay, sir. We saw that. So, Vaidyanathan, to the investors, I mean, you have been saying that it would take 5 years to actually put the bank on rail. And this is a unique case where, as I said, even though a NBFC got merged with a bank, but actually it's the first case where the management control was taken over by NBFC. Now, 5 years is too long a time, and I must say that you are bold and courageous enough to say that 5 years, not saying starting 2 years or 3 years and extending at 5 years. Are you now we are about a year now. You tell us the progress. Is it 5 years, or are you elongating it or shortening it? Where are you?
See, basically, when we merged. Capital first.
Because even it's not exactly relevant, but incidentally, stock market is still not convinced about you. It's still the pricing was where they are. It's not going up. So normally the market bets on future, not of today.
See, Capital First, as you probably know, was a retail financing NBFC. We were financing loans of 20,000 rupees, 30,000 rupees, going up to 1 crore, 2 crore was the maximum ticket size. Loan book was 30,000 crores. IDFC Bank was a largely infrastructure financing. The name itself is IDFC, Infrastructure Development Finance Corporation, largely infrastructure financing corporation. About 26,000 crores of infrastructure, about 40,000 crores of wholesale. Now, when we merged, naturally, the book became 1,04,000 crores, of which 30,000 crores was retail, 70,000 crores was wholesale. That's the starting point. But like you asked me in one of my earlier conversations, your first question to me was, IDFC Bank has no CASA, low CASA. It's a bank license, and Capital First has no CASA. Assets plus assets are assets. Who has CASA? Now, that was a starting point. So when we put together, CASA was 8.68%. Now, obviously, good banks in India have CASA of about 40% to 50%.
Kotak has 50% plus.
Kotak has 50% plus.
HDFC, I think 47, 48%.
Somewhere there. So, when you start 868, now, when I try to give a projection for the future, I try to put up a number saying that, look, in 5 years, we will get to 30% CASA, because people told me getting CASA is very difficult. And therefore, I took my best estimate, 5 years, I said 5 years I'll get 30%. And I put out a picture of the following. I said 5 years we'll have 30% CASA, we'll have 70% retail bank. In 5 years we will have a large diversified liability book and so on. The reality is, to answer your question, is that I'm really happy to share with everyone that CASA percentage is coming through very fast. In just 3 quarters, our CASA has moved from 8.68% to 18.7%. So when I say that I will touch 30% in 5 years, let me just assure you now, I will overshoot that number by a wide margin. We will be among the finest and the highest CASA banks in the country in 5 years, probably in excess of 50 to 55%.
Okay. But other thing, before that, just tell me one thing. In your context, is CASA that important? Because traditionally, when Indian banking system gives too much of importance of CASA, current account, it doesn't pay any money. SA, savings account, it pays the minimum. Till 2011, February, I think, it was mandated 4%, right? After that, when it became dismantled, people started giving 5%, 6%, but at this point of time, State Bank of India is offering 3% on SA on 1 lakh plus. And it actually wanted to bring it down. If in future interest rate, policy rate goes down, SBI even could go below 3%. Others are paying 3.5%, 4%. You are paying much more. So for me, I don't see much, because you are paying your SA as much as some of them paying on their FD rates.
No, absolutely. See, CASA is still very important, because what is CASA? CASA is not just because current account and savings account. What CASA brings is stability. Stickiness of money.
Yeah.
And on that front, when I guided for 30% in 5 to 6 years, I am feeling I'll get there in 3 years.
Okay.
That is the pace at which it is coming.
Okay.
Now, so it is stickiness. My main objective is only one. Basically, the regulator, when they give a banking license, as you rightly said, that we were one of the very few instances where we proposed a merger and the regulator approved it straightforward within just a few months. In 11 months, straightforward, we got a banking license, or we merged with a banking license, effectively became a bank. Now, to me, it is a very important thing. It's like a sacred thing someone has handed over to you on a platter saying that, look, I'm giving you a license, keep it safe. Now, for me, the first responsibility is a depositor's money. Therefore, my first objective is to diversify liabilities. Assets come later. I must share one data point to you. 3 quarters, loan book has not moved. It was 1,04,000 crores at merger. It is still 1,07,000 crores. No movement. Only CASA has doubled.
Correct.
So my game plan is that one more year forward, the loan book will not grow. It will be like probably go for 5%. But CASA will double again. So what is 8 has become 18, 18 will become 30, 30 will become 40. I am just skipping fast to CASA. Once I'm 40% CASA or 30% CASA, then in India, it's a bank after all. You can grow forever and ever and ever. Look at HDFC Bank, maybe 25 years ago, 30 years ago, till today growing at 20%. ICICI Bank 1994, till today growing at 20%. So we can grow forever, even beyond me. But first 3 years, fix CASA, fix liabilities, get stability. That's my game plan.
Correct. I think also you can afford to pay a little more on SA, that is savings bank, because your earnings on assets have increased, because you are getting into more retail. Your so-called NIM, net interest margin is going up. And as you rightly said, that your balance sheet remain the same, but I think the composition of retail and wholesale has changed. If I'm not mistaken, you have about 40% retail now, which was 20% before the merger took place.
That's entirely the game plan, actually. In one sentence, 30 seconds, the business model is very simple. Capital first lending yield was about 16.5 to 17%.
Yeah.
Borrowing cost was about 8.8%. IDFC Bank erstwhile, borrowing cost was 7.5% and lending was 9.3. So the mix is a fantastic mix. I saw your Rajkiran was having a hard time with you, but in our case, it becomes a very simple conversation. It's a very simple conversation because you take off capital first borrowing and replace with IDFC Bank borrowing cost of 7.5. You take off IDFC Bank infrastructure loans at 9.3, replace with retail loans of 16.5. You get a bank which is a borrowing cost of 9.3 and lending of 16.5. Wow, it's an amazing model. So people who are not seeing the model today will see it 1 quarter, 2 quarters, 3 quarters from now. I am very confident of it. I must remind you, Capital First was a loss-making company in 2009,
Yes.
8, 9, 10.
When you took over, yes.
When I took over, it had 3 years of losses.
Yes.
After I took over, 1 more year of losses. But once it became profitable, it had a 56% compounded CAGR of profit for the next 8 years.
Yeah.
I believe this is that model coming here. People will see it when they see it. And for your information, so you said stock price not moved. Let me say stock price is up 20% in 1 year, despite all the things that you heard.
Okay, let me ask you last question on this. What is the ideal composition of your assets? You think it will be 80% retail and 20% kind of thing, 20% wholesale? Is this what you are aiming at? That's point number 1. And point number 2 is this. Somehow I have a feeling you will be a bank, skin of a bank, but business model in NBFC model. Is that correct way of saying it? Or am I being unfair?
See, wholesale banking comes from the ability to do wholesale banking comes from the cost of funds. If you see big banks like SBI, ICICI, HDFC Bank, the cost of funds is 5.1 to 5.2%.
Yeah.
So obviously they can lend at maybe 9% or 9.5% to a AAA rated company, and they have a viable and a fantastic model. That's not my model. I am a new bank starting fresh. Our cost of funds is 7.5%. So I will not fight the game which the big banks play. So we will straight away go to the zone of retail, because retail, apart from giving better yields, has very low NPA. You know a small borrower, you look all around yourself. Will you default? Will you default? Will you default? No. But in the same industry, we know the top 20 names. They all defaulted for over 5 to 10,000 crores. So retail is diversified, retail is low NPA, retail give better yield. So our model is different. Our model is borrow at 7.5, lend to retail, and still be very profitable. Now, will we do corporate? Yes, selectively. What is the model? Maybe 5 years from now, will probably be 80% retail, maybe 20% wholesale. But that is a very diversified kind of retail.
You didn't say that. Will you be an NBFC under the skin of a bank?
Yes, it's a business. It's a lending model is an NBFC model. Borrowing model is a bank model.
Okay, you said that. So you heard the players or the makers of or the writers of the new narrative of Indian banking. This gentleman from Publicita Bank, who's in the process of merging 2 banks with him. Vaidyanathan, the first NBFC management takeover of a bank, and he has his own plan.
Merger.
Now, yes, now
Tamal, we call it merger, just to clarify.
You call it merger. Yes, that's an euphemism, but all right. Ashu, my first question is this: how does it feel like to be in India? Because people are talking about, as we recently wrote that, talking about a recent deodorant. You will find that at the changes various places. So it could be even a Indo-Pak border. क्या चल रहा है सब? Fog चल रहा है. So similarly in Indian financial system, अब NBFC बोलो, bank बोलो, कहाँ पूछो क्या चल रहा है सब? Fraud चल रहा है. Only the size are different. So come back from overseas 20 years, you are seeing all over fraud. You are seeing NPAs are growing. You are seeing also a trust deficit. People are asking whether my money is safe. Reserve Bank of India is issuing a release saying that banking system is safe. Don't bother. We are there. So how does it feel?
One, Tamal, I'm really glad I didn't meet you before I took the job, because
Okay.
I may have changed my mind. But no, listen, I think with all seriousness, I think it's very important to divorce what's happened in the last 4 to 5 months in the economy, and perhaps
Closer.
yeah, or perhaps what's happened in the NBFC, and therefore its overhang on the whole financial system over the last 12 months. And I think one of the interesting things is when you come back to the country after a long time, you do take an outside-in view, which is very much centered on what's the medium-term secular opportunity in India. And to me, none of that has changed, right? So I think, and again, you asked me, you were out for 20 years, you're back. I think compared to 20 years back, or even maybe less, I think we have fewer, stronger banks today, and I think the path which is happening right now is going in that direction. I think there's certainly better recognition of NPAs. I think credit bureaus did not exist. So I think the digital infrastructure which you see in India is probably, barring China, in any large emerging market, it's probably the best. So I think, again, I think we've got to be careful not to get overswayed by some of the recent sentiments. But, I remain very excited about being back, and I think I'm very excited about continuing what Citi's strategy in India is.
Yeah. Tell us, you are insulated in some sense because your NPAs are manageable in a very low level. You are doing a very robust balance sheet and all. You had some problem many years back with your NBFC got into trouble and then they got liquidated and all. So how are you trying to actually, is there any plan to seize this opportunity? Because we typically find that the foreign bankers, whoever tried to get into retail in India, burn their fingers. You call it Barclays, you call it Deutsches, you call anybody. So what's your plan? Is there any plan to seize the new opportunity that is arising out of the weaknesses of public sector banking industry and the near decimation of some of the large NBFCs?
Again, listen.
Or you will continue to remain a state city bank? No, you'll not get into rural areas. It's a city. Huh?
I think I'd rather be a sedate, growing over through the cycle than being very flamboyant. But no, I think in all seriousness, I think one of the things which I think the banks have learned, especially after post-financial crisis, is if you've got to give the right return on equity, you've got to play on your core competencies, you've got to play on your strengths. Now, we've got to realize we are a foreign bank, and we've been in this country since 1902, so in a lot of ways we're very embedded. And we were always an institutional bank, but I think if you go back to late 80s, in a lot of ways, Citi created a lot of what consumer banking is understood today in terms of the first ATM, the first credit cards, and was a real trailblazer in consumer banking. So I think for us, the strategy is very clear. We're going to play off a few themes which we believe play to our strength. And the great news is I think there are secular medium-term opportunities which will carry on. I think number one is the global theme.
Yeah.
And for us, that plays out in terms of getting clients who are multinational clients who come to India. India is still a huge domestic market. And I think what we've found now is it's not only the traditional corridors of US, Europe, Japan, but increasingly companies from Taiwan, Korea, even China will continue to come to. And I think for Citi, that is a very important and a very important segment where we serve. On the investor side as well, I mean, if you look at India's ambition to be a 5 trillion economy, and we'll get there. We can quibble over whether it's in 2024 or 2025, we'll get there. And as a country where we're going to need foreign capital, because our domestic savings is not large enough to meet our growth ambitions, you need foreign capital, whether it's FDI or FPI. And again, I think we see our role in helping some of the investors come into the country, and that reflects in the large positions we hold, for example, in the custody business. And that, to us, is, like I said, a secular trend. The second broad trend, which we're trying to use, is around digitization. Again, like I said, kudos to RBI and the government to have created a fantastic digital infrastructure backbone in the country. And because of that, I think a lot of the propositions which we have in our consumer banking and also in our institutional banking, especially in our transaction services business, which is a huge powerhouse for some of the CASA businesses which we do, is I think we are increasingly working to maintain that digital superiority and trying to work with fintechs to co-create so we can solve our customer pain points. And third, I think, is around the whole trend towards urbanization, consumerization. India is a young nation. I think those aspirations of consumers will remain, and I think that plays in well to our credit card proposition, for example. We're now from organic growth. We recently signed up for a partnership with Paytm, as you know, which gives us, in our opinion, a turbocharge, we hope, on some of the card acquisition as well. So we are going to stick. I think we are not looking at trying to feed off the carcass, because I don't think there is a carcass. And I think we're going to stick to our strategy, Tamal, which I think has served us well in the past, and we hope it will continue to serve us equally well going forward.
My last question to you is this. yes, you are a pioneer in ATM producing, bringing ATM to India, or card business. You continue to remain the biggest private bank, foreign bank in India and all. So is it like it will continue to remain the same, or would you like to take city to towns and villages? And you can do that because Reserve Bank of India has said that while priority sector you have to fulfill like any other banks, export is no more a component of that, over a period of time it is going away and all. But at the same time you can also go for local incorporation. In fact, two banks have done that, one very small bank, I think State Bank of Mauritius, and other one is DBS, she has gone for local incorporation. So moment you get locally incorporated, you are treated like any other bank here, you get all the branches, as many as you want, and as I said, you can take city to town and villages. And if you are so convinced about so much of opportunities in India, why don't you do that, or you plan to do that?
Yeah, listen, I think currently there's no plan, and I'll tell you why. I think we have in 18 cities, we have 35 branches.
Yeah.
I think we do not believe currently, for what our strategy is in terms of our client business and the businesses we want to grow, that's a real constraint. Now going forward, to the extent the parameters around being a branch versus a wholly owned subsidiaries change, we would look at it. But right now, I don't think we feel trying to go into the towns or villages, as you said, is really on the strategy, because we don't think it's a constraining element of the businesses where we focused on.
Thanks for being so candid. So we are left with Ravneet and Mr. Sharma of IDBI. So I'm not going to you and keeping you last because you are the most challenging task, but because I have started like public sector, then private, then foreign. So I'll go to somebody whose identity all of us curious. So first question is this, sir. Can you tell us, are you a private bank or a public bank? So, seriously, it's a serious question. Jokes apart.
Seriously, I'll tell you.
Because a lot of questions people do ask, I don't have the answer.
I think that way people, we will all appreciate
Bole, sir.
that IDBI Bank has always enjoyed some special status.
Okay.
Earlier, it was not classified as nationalized bank, it was classified as other public sector.
Yes.
Actually, when it started as a private bank in 1994 as subsidiary of IDBI, the DFI.
Yes.
Then reversal merger took place, then it became other public sector bank. Now
The
after LIC
institution
having
got
taken over,
merged with
yes,
the-
now it has been classified as private bank
Huh.
because 51% shareholding is with LIC and government does not have any commitment to increase the shareholding beyond 51%. So that's why it is classified as private. But yes, we are passing through a transition phase. So it will take some time because we have come from DFI, public sector bank, I think within a period of 1 year. Then
So you are a private bank.
Yeah, we are a private.
But you are subject to CBI, CVC, etc., like other public sector banks?
Now, again, here again some mix. That's why you said you started.
So special
that
status remains, tell us.
Again, special status.
Boliye, sir.
Because now this 51% is with LIC and LIC is 100% owned by government.
Yeah.
Now, as per CVC guidelines, yes, they say that if, the subsidiary, it's a 51% subsidiary of any government undertaking, then it will be covered by CVC guidelines. So that way, yes, we are covered by CVC guidelines. Again, it's a special status.
So, but tell me, sir, for you as an individual also it's a special status. You are with State Bank of India, right? Then you got into a private bank. Then you came back to to head another public sector bank, Canara Bank. And now you are in a bank where it is private bank, but for in some sense public also. So it's not unique of you also as a banker, isn't that?
Now, in fact, I feel good, and especially, you started with that I have that tough assignment. I'll slightly disagree with you. It's like it's not tough. I feel it's challenging assignment, and as that Chinese proverb says, challenging times are interesting times.
Okay.
So it's interesting, and it will give me a lot of satisfaction, once the bank turns around. It will be really interesting and, very
Sir, now
satisfying.
how tough, you said it's challenging, not tough, and how challenging, let them give an impression, and you will hate me for saying this. When ek baar aapko bola tha, you got very upset and all. Your job is like the magicians with a pitcher of milk. आप देखिए पीसी सरकार का मैजिक देखा आपने कभी वो बोलता ही है, my grandmother has given it. Then you will pour it, all milk will go away. After 5 minutes, again you will bring it, again you will milk. Same thing, IDBI का losses. अब देखिए, every quarter is going up, up, up. It's now 39,000 crore plus. Record. अब कब खत्म होगा सब बोलिए.
अब तो पहले let me first clarify that in September quarter it was not up, it was down. Number one. Number two, basically yes, you know, you have to go into the past some history. That
Correct.
IDBI was DFI. It had major advances in that in a corporate sector. Now even, you know, before that, if you see, it was 70% corporate and 30% retail. But even on 31st March 17, it was 60% corporate and 40% retail. Now, you know, this, all of us know, because this corporate sector suffered this problem, so that's why IDBI also suffered this problem. And more particularly, you know, the CDR when started, it was IDBI was in charge. So basically, like the nature, the corporate culture has been that, you know, how to help the corporates by rehabilitating and all these things. Somehow it has not worked. But now if you see, you know, the things are changing. I will not say totally changed, but it is a transition phase. Now from that 70-30 position, then 60-40 as on 31st March 17. Now today, when in September we were 53% in retail,
53% retail.
53% in retail, and now 47% only corporate. Partly, yes, PCA has helped us. Now the other parameters, if you see in the meantime, when we were under PCA, we have, you know, almost all revised our all corporate management policies, all risk management policies. What, you know, I was listening to the DG, you know, whatever he was saying, I think more or less we have completed that all. And that recognition, he was saying that, you know, let us first recognize recognition, we have completed it all. Now, on the granular front, if you see my profitability in this quarter, it was, you know, 19% up YOY. This NIM was up. Cost of funds is coming down. My CASA, which used to be around 31%, now it is 43%. So all these things gradually we are improving. And you see the best part is my NPS PCR is 91%. You know, with that 91% of PCR, now I think once the recovery start coming, and one more thing I would like to specify here, because we were in corporate, 73% of my corporate advances, means basically technically written off plus total gross NPA, 73% are with NCLT. And literally NCLT first 7 months there was no such recovery. Retail we have been recovering. So once this now with this landmark judgment, SR judgment has come,
yes.
Once this starts happening, you know, the bank is looking towards the positive side. Now the recovery start coming, my net NPA is only 8,000 crore, and with that the recoveries, in any case, worst come worst, will be more than 20%. I am having only 9% of net NPA. So the whatever extra profit is coming, that will help me in improving the position.
On a serious
so that
note,
your wo jo doodh ka hai, I think now that milk will not be required.
Okay, sir.
We can now give milk to our stakeholders.
Okay. Okay. Now, on a serious note, yes, your CASA is growing. Your PCR, that is provision coverage ratio, is getting up. Your retail loans, the portfolio is going up. In fact, your retail NPA is as low as the best of banks in India. Yeah, right. So these are all very, very positive things. But tell us, when do actually we see the, like by this quarter end, I mean the December, or if it's not a price sensitive information, when do we see that IDBI is back to black? I'm not talking about wiping out the losses. I'm talking about on an incremental basis back to black.
Because
when
it's
do you see?
Little price sensitive information,
Yeah.
but still, I will like to say that, you know, this SR now, that decision coming after the Supreme Court, it will add to my bottom line, and with that many other recoveries will start coming. So within this financial year,
Okay.
Q3 or Q4.
Yeah, you have said that. And tell me, your ultimate objective is making IDBI a retail bank?
Yeah, right. But two things I'll like to say here.
Yeah.
IDBI traditionally is the, you know, it was the staff and the expertise we had got
Project
in
financing.
corporate financing.
Yes.
Not that I will totally become private bank.
Yeah.
Now you see, today my 53% of our advances are in retail and 47% in corporate. But, you know, our target, which we have fixed to ourselves, by this end of this financial year, 55% should be retail and then 60%. I want to go for 60-40 because we have got sufficient expertise. Maybe earlier we had suffered because sometime concentration risk was there, some other issue, but those things which we have learned from the past, I think will help that where we should take. Always corporates are also good, like he was also telling. All corporates are not bad. Even in particular industry also, I am of the firm opinion that's within particular industry may not be doing very well, but there will be still some good corporates will be there. So we'll have to be selective. With my the expertise available in the bank, I feel that 40-60 should be a good ratio for us.
That is one question, not about IDBI bank, but about total banking industry. This trend of going retail, if you ask any bank CEO, I am de-risking my portfolio, I am going to retail. Do you think actually we'll be into some trouble sometime later? Retail is actually a time bomb ticking away because everybody wants to shift focus from corporate to retail, but without understanding the nitty-gritty and the nuances of retail business. I'm not talking about IDBI bank at all, but do you think there's a possibility we can get into trouble in retail?
You have covered two things. I think you are right. Without understanding the nitty-gritties or all these things, anywhere you go, whether you go in corporate or retail, it will give you a loss. So first, of course, we have to develop the expertise, any bank, and for my bank also, over a period of time, since now 3 years, 4 years, we have been doing only retail. Yes, we have. But looking to the population here and the demographic profile of our country and the demand, I think sufficient scope is there, sufficient demand is also there. So only thing is the size of KP is quite big. Everybody can have the share. But yes, one more thing I like to say here in retail, when we say, because these are small advances, risk is well diversified. Okay. So that helps, in controlling things. Even in some
last question is this: LIC has come. Because government didn't have did not allow the government to keep on pumping in money. So whether admit or not, that's why LIC is a sort of proxy government. It has a lot of money. People say LIC is the lender of the last resort in India, not RBI. So it gives the money, fine. But I'm sure there is synergies. It will help you to grow your business. So what are in a minute, if you can say that, what are the things LIC and you can do together to lift the bank to the second level?
First thing, first thing which you said, that lender of the last resort also, but I like to say that my endeavor will be that now to have less and less dependence on LIC.
Okay.
Number one, I can give this reason.
Yeah.
Second part is, yes, the synergies various synergies have been worked out by us. It's banca insurance is only which all banks are doing. So this is not, I will not say that this is the synergy. The other synergies are there, the payment of LIC premium. They have almost 11 lakh agents are there. So if 10% of their agents can work as our BC or BF, or they can work as direct selling agents, so that get given good way. They have 40 crore policy holders. So we can have, all we are working on that. So, and they're opening various accounts and all these things. So it will, opening the salary accounts of employees, a lot of synergy, almost 100 action points have been worked out by us, and we are working on that. But one thing I can say here, that LIC also, not that, they will simply give us the accounts, unless we give them the good service and good benefits. Sure. They will work on commercial lines. So all these first, we have to prove ourselves and what other banks are offering. That we have to give better than that, then only they will work out. But yes, various synergies are there and these are being worked out.
So it's not money alone, you can explore the synergies also to grow business.
Yes, certainly.
Thank you, sir. Ravneet, sir, the honor is yours. Last thing, as I said, I don't know, probably you are the most challenging job. Yeah. So not only the most challenging, I think you also appeared for the maximum time on television channel for the last few years. Every time there is...
I always say that, we have 2.5% of the banking market share and 97.5% of the media share.
So tell us how has been. Yeah. Sure. Okay. So tell us how has been this
journey?
Yes.
I think it's been intense.
Yeah.
You said challenging, but I also think it's been very gratifying. And the whole experience of working for a company which is Indian, so deeply embedded, so meaningful to the local economy, a footprint which is countrywide, people who are second to none, a great technology platform. I think sometimes these things get hidden when people just focus on the double B and below book and get a little obsessive about that. So I would say that on balance, it's been a very interesting and a very gratifying journey.
Do you regret coming there?
I was just telling
Had you known that, is it something, is it an iceberg that hit you? Is only 1 inch you saw and 9 inches below? Had you known that, you would not have gone there? Or?
So I will admit that it has been a lot more challenging than I had anticipated.
Yes.
But if I had to turn the clock back 8 months and take this decision again, I'd take it in a beat.
Okay. Now everybody asking the same questions and coming on the same answer, that the capital. Because yes, your total equity is fine, as far as capital adequacy ratio, but if you see the so-called that CET1, that's the core capital, is only 8.7%, so the growth is being impaired unless you grow. And what also foxes us, we can't follow, we can't understand that. So you are not a promoter, you are a CEO. So why don't you play Vikram Pandit of Citi in US? What he did? He just at a throwaway price, whoever came, because money is needed for you. Why are you bargaining so hard and all? Why haven't you raised the money till now, sir?
So where is the
And how does it matter? Because you are not a promoter. So the pricing is, it's the saving the bank and growing that is important. If that is the case, why are you so think about the focused on the right pricing?
So the question I have for you, Tamal, is that what anecdotal evidence do you have that I've been bargaining for the price? I've never said that. I've never said that we will not raise equity at a price. I think the key, as we should understand it, is that the first and foremost task before us was to be able to stabilize things, right? And stabilize came in many different ways in terms of what was the expectation of the regulator, what was the expectation of stakeholders, employees, etc. It's a large bank. Don't forget that. Having stabilized the operations in terms of being able to have the organization running at a certain pace, do remember that our CET1 at the end of Q1 was 8%, and we were organically able to accrete it to 8.7 over the next quarter, although we did a small QIP in between. I think the whole discussion around capital was to be able to size up how much capital did we need, what are the purposes that we want to put that capital to use, and then be able to come to a determination in terms of, like I said, the size and how we want to use the capital. And I think if you are a responsible organization which is looking for a large dose of capital, I think you need to be able to answer these questions rather than say that, look, I think my single biggest challenge is capital, and the moment I've raised capital, I'm over the hump. And to my mind, that doesn't solve the underlying issues which we had to somehow address. But nowhere have we been hung up on a price at which we want to dilute. It's been talking to the right investors. At the end of the day, we are not just looking for growth capital, we're looking for transformational capital. So it's been an iterative journey in terms of how we've socialized it with internal stakeholders, with external stakeholders, and of course, the potential investors. But what I would say is that, we're getting to the end of that journey, and hopefully you are able to, cross that hump in very short order.
So it's happening very shortly, right? Two more questions quickly is this, the stability, keeping this thing stable, that what you were aiming to achieve first, you have achieved that bit? Is now the organization is stable now?
I think the organization operationally is stable. I would say that, once we have the capital in place, then we can say that it's financially stable as well.
Yeah. Final question to you is this sort of trust deficit in the system now after PMC. People are even scared of keeping money in public sector banks. So did you have any kind of experience there that people are withdrawing money, or there's a slowdown in your deposit accretion because of this environment?
So I think when we talk about the trust deficit, I think that is the single biggest problem that is plaguing Indian financial services. Yeah. So forget the relationship between depositors and banks. Even between financial institutions, the trust lines are broken. You generally feel that if you are saying that your problem is X, your problem actually is 1.5X. So I think it needs to get addressed at multiple levels. And I would say what is very critical about this aspect, Tamal, is that at the end of the day, financial services is a business built on trust. And if you cannot restore that trust, I don't think this industry can grow. And this industry needs to grow given the fact that it is such a underserved economy from a credit standpoint.
Correct.
So did we, feel some of the heat? Answer is yes. More so, at the end of September, early October, when, the promoter stake got sold by the mutual funds and, there was a big drop in the share price. But I think it's not just restricted to us. I think the whole industry per se needs to rebuild trust.
But you have much a better, bigger, stronger retail franchise now than what it had a few years back, right? That's a strength for Yes Bank. Yeah?
So I think we are not so focused in terms of the retail vis-a-vis the wholesale. I think what we should be looking at are which are the areas of the economy which are underbanked, where on the back of technology you have better risk management systems, you can manage the risk on that on a real-time online basis. And that's where the scalability and the ability to be able to generate the returns that you're looking for will come from. So I think we need to get a balance, and that balance will not just come as a wholesale retail. I think that's too broad brush. I think there are many shades in between, which also we'll need to address.
Thank you. So we just have a last half a minute each from each of you. Mr. Rajkiran had to rush to the airport. I have already made him miss his first flight. So second, I can't afford to miss him. Yes. So this is the new narrative. I mean, this is a banking conundrum. We have more banks, we have less banks, we have big banks, we have small banks, we have bad banks, we have good banks. So if I want to have, Vaidhi, starting with you, one sentence each. All of you are players in writing this new narrative. Just tell us one sentence, if you need to write one sentence about the new narrative of Indian banking, what will be that? Starting from you, just one sentence each, that's the thing. Sorry, we can't take any questions. Next round, we'll take questions with the last panel.
The new narrative of banking is a huge, unbelievable opportunity, 3x growth of asset book in the next 10 years is coming our way, just like it grew 3x in the last 10 years.
Oh.
Number two, that huge amount of the digitization change in the ecosystem is coming in front of us, and we have to learn to play that game. And number three, I want to play like Rahul Dravid, and I'm playing the Rahul Dravid game, play slow, play for long, and hit centuries and triple centuries.
Thank you, Ravneet. One sentence is enough.
So I think
not about your bank, I'm talking about new narrative.
I think if you historically look at the market gain accretion that has happened in Indian banking, has been very slow. I think that is set to change with technology. I think winner will take all, and that's a transformation that all of us should be prepared for.
Rajkiran, sir.
Yeah, I think we need to look at inclusive banking, because actually system as a whole actually has to grow. In our country, actually, we are really starved for credit and good banking institutions. We need to do inclusive banking, and ultimately it is going to benefit everyone. We need not look at short-term valuation of these institutions. We need to look at long-term valuation of these institutions, because ultimately all of us will contribute to the growth of the nation.
Ashu?
I think the banking wallet is growing and it will continue to grow dramatically. I think great news. I don't think there's enough capital to be supplied only by banks in NBFC, and I think capital markets is going to become an important supplier of capital as well, both domestic and foreign capital.
Rakesh, sir, last was yours.
I want to see this bank, bank can turn around and give sufficient return to its stakeholders. And, whatever it has taken from government, it can pay back.
That's your personal commitment.
Yeah.
On behalf of IDBI Bank.
On behalf of IDBI.
Okay. Thank you. Thank you. So he does not want to be the magician anymore. So ladies and gentlemen, the most exciting, the last round is just a few minutes away. Give them a big hand. Actually, these gentlemen, these five of them are the writers of new narrative of Indian banking in every sense of the term. Thank you, sir.